Are you self-employed and struggling to find a loan program because you're not quite showing all your income on your tax returns? Well, we have Stacy Flanigan, and she's with Angel Oak, and she's here to discuss some creative programs for us.
Thank you, ladies, for having me. I appreciate it. Love being here with you. Yeah, so we have some great programs, things that you can't get done traditionally through Fannie and Freddie. Mm-hmm. We have a bank statement program like you were just speaking about. This is for self-employed or 1099 borrowers that can't show all their income, don't show all their income, have an amazing CPA.
Yes.
Or maybe they haven't even filed their taxes. So these self-employed borrowers that can't use their tax returns, or maybe they can use their tax returns but are limited to a smaller priced home.
Yes.
We're going to use their bank statements to qualify them. So we're going to use their deposits that they're putting in their bank statements, whether they're using personal bank statements or business bank statements. We're going to look at the deposits going in and use that as their income. So
100%?
So we use an expense ratio on there as well because we do know that there's expenses associated with their business. Mm-hmm. So depending on what they do is going to depend on how much of an expense ratio factor I can apply.
Gotcha.
If it's a restaurant, they're going to have more overhead and expenses than somebody that owns maybe a small retail shop or somebody that's 1099 or does IT out of their home.
So we make sense.
A realtor
exactly.
that has no, big overhead too.
Exactly. So somebody like that, we're going to use a 15% expense ratio, which means I can use 85% of their deposits. Mm-hmm, mm-hmm. And then somebody that owns like the restaurant might be a 70% expense ratio. So we're going to look at that. And if it's, a food truck or just a small lunch place or breakfast place, that might be a 50%. So I'm going to look at those things for you. I'm going to look at how many employees, how many locations, or do they work from home?
Mm-hmm. Does it matter if it's business or personal checking account? Does that make a difference?
Nope, we'll take either one. And the great thing too is it gives you so much more buying power for your borrowers. Mm-hmm. So if you look at their tax returns, go ahead and get their tax returns. See what they qualify for. They might qualify for a $250,000 house with what they claim on their tax returns. But then when you send me their bank statements, I'm going to average those deposits going into their bank statements, and they may now qualify for a $500,000, $600,000 house. Because we all know as self-employed, we're going to write off as much as we can. Sure. We don't want to give Uncle Sam any more money than we have to.
And do you want 12 months or 24 months?
We'll do either, whichever's better for them. We had COVID a couple years ago, so there was some little downtime. So the most recent 12 months might be a better average. Or maybe they just opened their business. We have so many people that are self-employed that opened a business after COVID because they got laid off from their jobs.
Right. So
So they opened a little boutique or a sandwich shop, and their first year getting up and running was tough. So that might be a better 12-month look back for them.
Do they need a 2-year history of employment?
Yes, they do need to be self-employed for 2 years.
In the same type of work that they open their business in.
Correct. And their business, if they do open a business, does have to be open for 2 years.
You also, if the spouse has a W-2, you can use the W-2?
Yeah, so I was getting ready to say that. So increasing their buying power just by looking at the deposits going into their bank statement, you can also use a co-borrower's W-2 income. Or maybe the co-borrower owns another business. I can use their business bank statements plus the borrower's business bank statements.
Okay.
Then, or like Kim said, if you want to use the co-borrower's W-2s and pay stubs, I never want to see tax returns, but W-2s and pay stubs, we can use that income as well. So again, increasing that buying power.
Awesome.
To get into that bigger
So,
home.
like this program, do you have to have really, really, really good credit, or is it okay to have average credit?
Yeah, so we do statistics all the time. So our average credit score on this program is a 762, believe it or not, but we go down to a 680 currently.
And what other great products do you have to tell us about, Stacy? Because I know you guys have some creative programs.
We do. So all of our programs, just to touch base real quickly on the non-warrantable condo.
Huge right now.
It's huge right now. So Fannie and Freddie added those addendums asking all those questions about the structure of the complex and whatnot. We don't ask those questions on our condos. So I'm getting a lot of condo reviews for condominiums that used to be able to go Fannie or Freddie, but because the HOA doesn't answer these new questions the way that they want them to, or maybe they refuse to answer them at all. I've seen
Some
that
of
as
them
well.
refuse to
Yeah,
even answer the
it's
damn
like an
questions
act of
that are on
kindness.
there.
Yeah. So I'm getting a lot of those borrowers. The borrowers are fine. It's the condominium.
Right.
It's the
Oh,
complex.
okay.
So we'll do that on any of our programs, whether it's full doc, bank statements, or the DSCR, which I'm getting ready to talk to you about. So just wanted to throw that out there.
Awesome.
And we will do owner ocs, non-owner ocs, or second homes on the non-warrantable. So the other program I wanted to talk to you ladies about is the DSCR program. It stands for Debt Service Coverage Ratio. So what this program is, it's for investment properties only. They can be a new time investor. You do not have to have any experience owning investment property.
Okay.
So nowadays, right now, people are wanting to increase their existing rental portfolio, or maybe they just want to start getting into renting and start to build a new portfolio. And that's fine. So this DSCR program is a great way to get into this. And what it is it just covers, the only thing I need is the market rent on the appraisal to cover your new mortgage payment. So there's no job, no employment, no DTI on this program. I just want the property itself to cash flow. And how I'm gonna know if it cash flows is when you order the appraisal, you'll order the market rent analysis called the 1007. And as long as that market rent covers your new PITI payment, you're good to go.
Do you take out the vacancy factor?
Nope.
You don't?
That's what's really
We
nice
use
about this.
100% of
That's
it.
great.
Mhm.
Yeah.
So it doesn't matter what kind of employment they have, debt to income ratio, credit score,
Yes, credit scores.
Credit
is
score
important.
does, yes.
But yeah, it's a
But they
great,
have
simple
to own a
program.
primary residence.
Yes.
Yeah, so Dodd-Frank says we can't do the no-doc loans or no-income loans on primary residences, right? Or
Mhm.
second homes.
Right.
So for us, one of the ways that we verify that it's not gonna have an occupancy concern is to make sure that they own a primary residence.
Okay.
So if they rent or live at home with mom and dad, then there's an occupancy concern that this new house being bought under a no-income loan could possibly be
Primary.
a primary residence.
That makes sense.
Yeah.
Well, you've given us a lot of great programs. We can always get a hold of Stacy if you have any questions on any of these programs. We can reach out. We're pretty rehearsed on these ourselves because we do a lot of business with these.
And don't forget too, right now is obviously a crazy time with the interest rates going up and up and up. And just, remind your borrowers that this is temporary. Your rate is not going to be with you forever.
That's
My
what I
first
said.
home was 12%.
Yeah.
I bought it on a SIVA, Stated Income Verified Asset Program. I was 22 years old. I had a 12.5% interest rate.
Wow.
So as soon as those rates start coming down, people are going to refi.
Exactly.
And if you love the house, what's the saying? Marry the house, date the rate.
Yeah.
Now, do
Exactly.
your programs have prepayment penalties?
Just on investment properties.
Okay.
Owner ocs and second homes, there's no prepayment.
So when rates do go down next year, because we're going to be power positive thinking,
Yes.
We
rates
can
do go down,
refinance.
we can refinance them.
100%.
And do they have to have the first 7 months payments made? Do you have any type
6
of?
months.
6 months, okay.
Yep,
So there is an early payoff penalty, but not a prepayment penalty.
right.
Exactly.
And even on the investment proproperties with the prepay penalty, they can buy that down to a 1 year or out completely
Okay.
if they don't want it,
Okay.
thinking that rates might come down, as early
They
as the
can pay it
beginning
off.
of next year. We hope.
Okay, cool.
Do you have any other products that you really are excited about or you're seeing a lot of traction on?
Definitely the two biggest products we have is the bank statements and the DSCR for sure. That's the majority of our business.
Right, I'm sure.
We do a little bit with the foreign national market. So I don't know if you guys have realtors that are specific to foreign nationals, but we do have a foreign national. It's basically the same as the DSCR, where it's based just off the cash flow of the property, but they don't even need a credit report. They don't need,
Oh, wow, that's awesome.
they don't need to build trade lines. They don't need credit reference letters or anything like
Do
that.
they need to have a local bank account?
So
in
they
US?
do have to put their funds, their down payment, the funds used for closing, and their reserves into a U.S. account 30 days prior to close.
Perfect.
That's not bad.
Yeah,
No, that's good.
And how much down payment requirement?
30% on that.
Okay.
That's not bad
Awesome.
either. It
No,
really isn't.
no, and they need nothing.
Wow.
The property just has to cash flow, and if you're a good investor, you're buying a property to cash flow.
Awesome.
Well, see, there's ways for people to buy houses. A lot of people that are just have unique situations. They all think they can't buy.
Yeah.
And we wanted to show people you can buy. You know, there is a loan program to fit almost any need.
Yes, definitely.
A lot of great programs. Just give us a call if you have any questions, and please follow us on Facebook at Mortgage Chicks with Hot Tips.
And if you have any ideas for future podcasts or questions about this podcast, please email us at mortgagechicks@vandykemortgage.com.
You can also watch us on our YouTube channel at Mortgage Chicks with Hot Tips.